Hi everyone, I welcome you to the discussion on this topic, which is Ind AS 1 presentation of financial statements. Friends, we have already discussed the conceptual framework where we talked about the need for financial statements and the various elements of financial statements, including assets, liabilities, equity, revenue, expenses, and where we try to, of course, analyze the relevance of all these elements and map those at the respective places like a balance sheet, statement of profit or loss, and related financial statements. This is just an extension of the framework where we start building those set of financial statements. When we look at decision making for those intended users, right? So when I look at this Ind AS 1, which is basically about the structure which is provided for the balance sheet and statement of profit and loss. And there is also an element of statement of changes in equity. That's what we're going to see as a part of this particular discussion, right? So when I look at my Ind AS 1, before we talk about those financial statements which are listed, so let's use those terms here. Let's say there is a balance sheet, there is a statement of profit or loss, there is a statement of changes in equity. This is a new set of financial statement required under Ind AS, right? There is a statement of cash flows. By the way, this is detailed covered in a separate Ind AS called Ind AS 7, and then we have, of course, disclosure requirements, right? So the Ind AS 1 specifically covers the balance sheet, the statement of profit or loss, and statement of changes in equity, and also, of course, the relevance to the disclosures in terms of how they should be presented, what are all the information that we need to provide as a structured, as a standard format, okay? But even before we jump onto these items, right, and talk about the relevance of these items and how they should be presented, what is the structure, what is the manner, what are the attributes that we need to look into when we prepare these sets of financial statements, let's talk about also the need for Ind AS briefly, okay, where we start talking about the roadmap to the Ind AS. Okay, we were, and we had studied, of course, that at the intermediate level that there are AS in place, right? Accounting standards that we have studied. AS1, which was again the presentation. AS2 was inventories. AS3 was cash flow statements, and many such AS that we had studied. Now, importantly, the argument that probably comes to my mind or should come to my mind that why do I need a new set of standards, so called as Ind AS? And that is where we want to discuss it briefly, although it's not something which is a part of Ind AS 1, but this is again a discussion that we want to do to understand that where the globe was converging towards something called as international financial reporting standards, India wanted to bring its own set of converged accounting standards, right? Converged accounting standards, which are pretty much aligned to IFRSs, but they are not completely IFRSs in themselves, right? Keeping into consideration the Indian economic environment, keeping in the view that the economic environment of the country would be a little different from that of the other parts of the world, the decision makers, the authorities, and we will obviously spend some time talking about those authorities here, they decided to not completely use IFRSs as it is. Okay, so that's where some changes were expected. That's where some changes were brought into the Ind AS, and those changes could probably meet the requirements of and address the challenges that could have been faced by the preparers of financial statements, or the companies, or the entities which were required to follow, let's say, Ind AS there. Okay, while the fact remains that many companies, and it's okay to use those names, it's good to use those names. We may want to talk about the companies like Wipro. You talk about, let's say, the Bharti Group, considerably the Tata Group, for example. You would want to talk about, let's say, Infosys as a company, and many such large enterprises. They're already using IFRSs. Okay, so they use IFRSs for multiple reasons. Maybe they are listed abroad, and they any which ways need to prepare their sets of financial statements using IFRSs. Okay, what we want to also highlight here is that even though they are using IFRSs, they being an Indian company, end of the day, they're an Indian entity, they are also required to comply with Ind AS. Okay, so that is something that you would see an overlapping or a duplication of effort. Considerable duplication is happening because while Ind AS are pretty much in lines with IFRSs, they are not exactly a replacement of IFRS. So the Ministry of Corporate Affairs still requires these entities to use or apply Ind AS. Okay, so the roadmap would actually talk about the applicability, right? Applicability of Ind AS to the types of companies, right? There are some bases, basis the whether the entities are listed, whether they are so there's a net worth criteria. We'll be seeing those things as a part of the discussion, right? They're all being addressed, they're all being covered as a part of, let's say, this particular discussion. So that is something that you might want to kind of understand better to be able to appreciate the need of this particular standard. Okay, so when I look at the standard itself, of course we want to spend briefly time on what is meant by Ind AS, what is a roadmap for the implementation of Ind AS, and then we move on to, of course, the Ind AS 1, which is basically about the presentation of financial statements, where we want to discuss, for example, the scope and objectives, right, and the terms that we use under Ind AS 1. Okay, overall requirements for presentation. I think that's a key aspect, and that is something which is going to be also relevant for us from an examination standpoint. Okay, what are the overall requirements for presentation of financial statements? If I'm preparing, let's say, a balance sheet, what are the minimum items I should be presenting on the face of the balance sheet, right? Can I do some adjustments to the numbers? Can I offset, or can I net off the numbers, in case I see them, from a similar attribute, or they're from the same category? Can I do that? So they're all very, very essential aspects that we want to kind of cover much in detail, right? From a balance sheet or a statement of profit or loss perspective. Okay. Similarly, the disclosure requirements, we want to discuss those in detail. And we also want to understand, importantly, the differences between Ind AS 1 versus AS 1 that we had studied, and the carve-outs from Ind AS 1 to IAS 1. This is basically within the IFRS is the standard on presentation of financial statements. Okay, so IAS 1 is essentially, international accounting standard. It's a subset of IFRSs only. So we would also want to talk about, what are the key differences between, what we had under the global framework of IFRS versus, let's say, the Indianized version of the IFRS in the name of Ind AS specifically. All right. So if I look at the examination trend, yes, it was tested in its own framework, AS framework, right? Several times. But as you would observe, the criticality of this topic, this has been tested quite voluminous, right? 20 marks in May 19, and for 12 marks in November 19. So this is of considerable importance, and rightly so, because here we are testing ourselves. Here we are trying to ask ourselves, how much do we know about the presentation of elements on the face of a balance sheet or a statement of profit or loss, right? So what we will be addressing here, if I really take you back on where we started, what we would be addressing here is, while there are all these sets of financial statements, we would be talking about the minimum line items that would, let's say, appear on the face of the balance sheet or statement of profit or loss, right? It talks about the structure of these financial statements, including statement of changes in equity. You would again, as I would like to emphasize, statement of cash flows is covered extensively through Ind AS 7. It's just a reference which is there within Ind AS 1. That's the reason we wanted to, talk about it briefly. And then we talk about the need to prepare these and the relevance of these both at separate and group, which is the consolidated level, right? So on a standalone basis, so let me use also the word standalone basis, right? So the standard in AS1 talks about the need to prepare these sets of financial statements both at a standalone as well at a, as well as at a consolidated level. So we would be looking at all those parameters. There is one aspect that I should be mentioning here, is that my statement of profit or loss has two parts: something up to profit after tax. Okay. And there is a new element that you would hear, and we'll be using it very often when we discuss different standards, something called as an other comprehensive income, or OCI. Okay. So we'll be using those terminologies, and we'll be using those aspects when we deal with the respective standards as and when the need arises, but we'll be discussing those, from that perspective. Okay. So really moving on to what we were discussing, the need for the standards around all these aspects. And then we obviously talked about also the examination pattern just a while ago. Okay. When I now look at, for example, the coverage that we want to do to start with, we want to talk about, of course, the roadmap for implementation of Ind AS. This is not, again, as I said, that this is not a part of the Ind AS 1, but it is more to do with how we as an economy transitioned to Ind AS, right? Are we probably saying that all companies are required to follow Ind AS? We'll be addressing that question as well. And then if at all companies are required to follow Ind AS, then what is all covered, for example, within the Ind AS on the context of, the structure and content of these financial statements. And of course, we want to also address what is the objective of having these financial statements, what are those components of these financial statements, what are the general attributes or features of these financial statements, is something that we want to talk about. Okay. So to start with, the Ind AS and the roadmap for implementation, this is something which was, of course, the converged format, right, of IFRSs, which is issued by the central government under the supervision of the ASB of the ICAI, and in consultation with the NFRA, National Financial Reporting Authority, which is an independent regulator now, as we all would be aware of it, that NFRA is an independent regulator who's, supporting, let's say, the application and implementation of course, the Ind AS now. Okay. So the NFRA would be recommending the standards to the Ministry of Corporate Affairs, and the ASB, as we all know, is a part of ICAI, is a committee which is having representation from cross board, from various government divisions who are interested parties, could be income taxes, could be SEBI, could be RBI. Then there are professional bodies, academicians, and professionals who are involved in, who are a part of this ASP, right? NFRA, as I mentioned, that it's an independent regulator to ensure that the auditing profession and the accounting standards are, for example, are being implemented in their spirit, and that is where the role of, for example, NFRA comes. It's a relatively newer body. It came in existence very recently in October 2018, considering the fact that many instances had taken place, unfortunately, in the accounting and the auditing profession, where some corporate frauds were brought into limelight, and that is where the independent regulator had to be brought in, right? Who could oversee whether these auditing standards and the accounting standards are being applied in their spirit, rather than only only for the purpose, only for the sake of, let's say, putting those across, right? So the Ind AS, I think the brief part is that India did not want to bring IFRS's word to word, so they brought in a little customized version of, let's say, those IFRSs in the name of Ind AS. Okay. Now, importantly, the way the economy has transitioned to Ind AS, and it has been a a long journey for the country to adopt or take these Ind AS, right? So for any company other than banks, NBFCs, and insurance companies, it actually started on a mandate basis from 1st of April 2016. Okay. So any companies which were listed, for example, listed, right, with a net worth of, let's say, more than 500 crores. Okay. So any listed companies or companies which are in the process of getting listed and with a net worth of rupees 500 crores or more, they were mandatorily required to follow Ind AS starting 1st of April 2016. Okay. It was not mandatory prior to that, so it was all voluntary. Of course, when you say that it's voluntary, not many takers were there. People were still trying to understand whether they would want to go for it. So it was not something which was observed in practical life. But from 2016, of course, when it became compulsory, a large set of enterprises, and when you say a listed company, a lot of companies would have been covered already as a part of the mandate, right? But then it was not only confined to the listed companies, even unlisted companies with more than 500 crore rupees or equal to or more than 500 rupees crores of worth, they were also required to follow the Ind AS. And then the umbrella of the coverage was bigger, where it included that the group entities of even these companies, right? The group entities of both A and B. So if you're a listed company and you have a subsidiary and a joint venture or an associate, etc., they would also be required to, of course, apply Ind AS from a consolidation perspective. It's important to agree on that part, because it cannot happen that one company within the group is using one set of gap, which is Ind AS, versus the other group companies which were using, let's say, another set of gap, which is AS. So at a group level, you would again be required to follow, let's say, the same set of accounting standards, right? So I think both listed and large organization, right? And that is where the criteria of net worth had a role to play, right? Any large organization with a net worth of, let's say, 500 crore rupees or more, as well as any listed company, they would all get covered under the phase one, of course, plus the group entities, right? So that would be covering a major chunk of entities. But then it was a piecemeal approach. It was a phased approach followed by the government, where it says that from the next year and onward, any companies which have now a net worth of, let's say, 250 crore rupees or more, okay, right? So they would now get covered. So all companies which are listed on the process of listing, etc., which were not covered in the first phase, as well as the unlisted companies with net worth of 250 crore rupees or more, right? And the group companies. Okay. So listing now is basically another set of companies where you talk about the net worth of 250 crore rupees plus the group entities of those, they would all get covered as a part of the phase two, right? Now, that also means important. That also means that any company, even today, which has, for example, a net worth of less than 250 crores, they would still be applying the old AS, old accounting standards that we have studied, right? Smaller companies, so net worth of 250 crores is basically a chunk where they are started saying that somebody is required to now follow Ind AS. There is no choice on that, okay? But then any companies with a net worth of 250, less than 250 crore rupees has a choice to use Ind AS, okay? And once they have, for example, you know, adopted or they have taken Ind AS, they were required to follow Ind AS for any subsequent period. You don't have a choice to pull yourself out. Okay. So in theory, I may want to say that there's a company X which has a net worth of rupees 270 crores, right? So naturally, Ind AS is mandatory, right? But let's say for the sake of argument, subsequently the net worth declines to rupees 230 crores. Now you cannot go back and say that, I'm not required to follow Ind AS. You are still required to follow Ind AS because you had already been, you were falling within that categorization of the net laterally entitle you to go back to the AS, right? Similarly, it can happen. There's a company Y, let's say for the sake of argument, there's a net worth of rupees 2 to 3 crores, but it voluntarily takes that Ind AS. Okay, there's no expectation that it would grow, but it just thinks that let's prepare the financial statement under Ind AS. It's okay, but subsequently it cannot withdraw from Ind AS again, even if it is a voluntary decision to follow Ind AS. The company does not have a choice to go back and say that I just tried and I was not comfortable, I want to go back to the old AS framework. Even that choice is of course not applicable to the entities, right? So whatever we referred to, from a transitions perspective, it was all applicable to other than banking. When I say banking, including NBFCs and insurance companies. Okay, this is something which is the first phase and the second phase for other than financial and financial institutions and insurance businesses, right? And then we start talking about, let's say, the commercial banks, the scheduled commercial banks, excluding the RRBs, but including the NBFCs. Again, the similar phase was identified starting 1st of April 2018 and then 1st of April 2019, wherein it was said that NBFCs, whether listed or unlisted, having net worth of 500 crore rupees or more, that was the first benchmark, and the group entities. Okay, right? And then from 1st of April 19, all those NBFCs having a net worth of 250 crore rupees or more, and the group entities of those. Again, the similar kind of a path, similar kind of a transition, no change in with respect to those non-banking or insurance companies. It's just there's the years. So we started with, of course, for those non-banking and insurance companies started with 2016 1st April, and then 2017 1st April on a mandatory basis. And then when we look at the NBFCs, for example, it started from the subsequent year, which is 2018 1st April and 2019 April 1st. Okay, right. By the way, also importantly for insurance companies, it is still not applicable, right? So the government has been deferring that because insurance industry is presumably a fairly complicated industry. It's a fairly complicated business in it. That's the reason why it is not being addressed at this point in time. Also, I think there's another big reason why it is not being done, because even globally, the insurance, the IFRS on insurance industry, that is still not implemented, right? Not in 2021 as yet, right? So probably the governments are waiting for that implementation of the insurance standard happening globally first, and then only the timeline for applicability of the Ind AS on insurance companies would also come in the picture there. Okay, just to set the background around in terms of what is this expectation. So it's a very brief section that we talked about, wherein we talked about the Ind AS are essentially the IFRS converged standards under the supervision and control of the Accounting Standard Board in consultation with the NFRA, which is again an independent statutory body. The roadmap primarily talks about the phase one for listed and unlisted companies for having worth of 500 crore rupees or more, and the phase two for companies with a net worth of 250 crore rupees or more, including the group entities of that. All right. Thank you very much.